Alrighty, so I have some crazy updates for you and for anyone watching. So remember when we started our, what was it, gold backtest? We
Yeah.
started gold because NAS was very weird. Like if we go back to our NAS 100 backtest, I wasn't too happy with the results, right? It took us
Yeah.
5.5 months to make 44%. Like these numbers are rookie for me, or what I would call rookie. And so I kept looking into the issue a little bit, and let me make sure I'm recording. Where's my, give me just 1 second. Okay, my mic is good. Yeah, so I kind of looked a little bit into the issue because I wasn't very fond of these results. Like 6 months to make 40%, it sounded pretty bad when I know a lot of other traders or other people are making insane returns with NAS right now. Like even going into NAS 100 right now, looking at these charts, it's like there's definitely opportunity here that I'm missing out on. Like if we start from January, which is right here, this line right here, this chart should give us so much opportunity. And I kind of looked into it for a few hours. I went back into price action, replayed through all this, and I looked into it and I'm like, okay, I'm doing something very, very wrong. Why is it that my system's keeping me out of all this, right? And so I don't know if you remember, um, and this is gonna sound kind of crazy because it's probably something you just learned, but remember I'd stay out of these market conditions because wick. Do you remember that?
Yeah, I do
On the
remember it.
4 hour. And I don't know if I remember telling you this, but I was trying to isolate the variable of candle wickiness or chop, mainly wickiness, candle wickiness with respect to whatever time frames you're trading and when you should stay out. So for example, here, you have a lot of wickiness. Wick. Like there's a market condition I'd be staying out of. Wick. Giant wick right here, giant wick right here, wick. But I learned something. And what I learned is that there's so much potential, even in a 4 hour wiki market, that I was staying out of. And it's a variable on the higher time frame that's been keeping me out of a lot of potential. Because what happens when you like looking at this particular price movement right here? Jumping down to the, I'm gonna make this line a little bit darker. There we go. Jumping down to the, I'm gonna make it dash too, so it doesn't cover up price. Like a dash line would work. Yeah. So jumping down to the 4 hour or hourly, and we kind of take a peek at this price action. So I made a video just yesterday or today, or yeah, yesterday, about this kind of testing that I've been doing. And so the 4 hour wickiness can only show so much resolution into the price action, right? We know there's a wick here, but we don't know how it played out on the hourly. And so what I started doing is that anytime I see chop on the 4 hour or wickiness, I'm mainly referring to wickiness when I say chop right now. Like you can have the price delivery chop, which just means the 4 hour going back and forth with very clean candlestick chop. So like, you know what that looks like, I assume.
Yeah.
We just have no direction, like the market's overall doing this, but with very clean delivery. Or what I'm looking at is the actual candle by candle basis. And so when you step down to the hourly, you get that higher resolution that you need to see to know what's going on in the market. And so what I kind of started doing is I popped on a volume indicator on here and I started looking at the more liquid sessions. And so liquid would probably begin at around 5 in the morning to around 1 p.m. And look at this session. And I'm working with Denver time or Mountain time. So if you convert this to New York, just add 2 hours to New York. So from 7 a.m. New York to 5 p.m. New York is when you get the most liquid sessions. And so one important thing, I think I mentioned this in the other video. I'll actually touch on that in a minute. But if we look at the hourly price delivery, so many opportunities right here. Starting right here, so many opportunities, nothing. So many opportunities starting right on this candle, or even like halfway through this candle right here. You see that?
Yeah.
I'm actually gonna make this text like gray or something so it doesn't pop up. So now if we jump down to the 20-minute, and we actually go and look at the opportunities in here. I did a little back test yesterday that I started on NAS again. I think it was NAS. And so off this hourly push, you have potential entry right over this high. This is going to be your very, very first entry. And then you're going to have another potential entry over here or where was it? The vertical line. You're going to have another potential entry on the 20-minute right off of this candle. This is our first demand validation that comes into the market. Demand starts holding the market up, and you can see it right off that demand zone. Now we jump down to the 5-minute, and we try to calculate, where our average stop loss is going to be. And our ATR at this given time is like 0.27.3, something like that. We're in a very liquid session. So like 27, you have a giant. So we'll do like 13 to do half ATR. And look at the opportunity I was giving up on. Like no management to here actually. No management, managed to probably about here. 80% of the position comes off. You leave 20% running, managing on the 20. So 20% of the position, the remaining 20% would be managed to here, and then to here, and then to here, and then to here, and then probably to here, and the remaining 20% of the position would get taken out here. And so I started doing a lot of math behind it. And so if I jump down to the 5-minute, our initial 20%, I wish I had a calculator within this, but if we do the math behind it, we're going to have the 4.37 times 0.8, right? That's going to be our initial 4.39, our initial partial. And then if we take what's remaining of the position, which is going to be 20%, and we take the 20% at the 15, what is that? We'll call it 15R. We'll do plus 15 times 0.2. That's going to give us a total of 6.49 RR compared to the 4. So we're getting an extra 2 RR by allowing the 20% remaining to trail. So notice how we're adding so much edge to our system by minor changes like these. But yeah, what I kind of got into was the whole idea of you're letting too high of a time frame manage your entries, which isn't okay, because then you're gonna miss out, or you're letting the higher time frame manage when you get involved in the time and in the market, when you should really allow the 20-minute to tell you a different story. So like here, we're working with an average ATR of like 5.0. Yeah, like we could tighten this up to like 2.5 or something for half ATR. Something like that. Like so much opportunity I've been leaving on the table. And so this was at a not very liquid time. Looking at the average number of orders, like 516 units or lots, whatever asset you're trading. And so kind of building off of this, if I go into these markets, I was looking at, I think it was like lean hogs or something, or oat futures maybe. Let's, what market was I looking at? Potentially like oat futures, or it was like some weird asset. And I just kind of threw in an entry on there because I was looking at it a while ago. Yeah, we'll just take this not a very good example. Trying to find which market it was, but yeah, this is a very bad example. Trying to find which one it was, but long story short, I was trading a market that wasn't very liquid, and I'll show you what I mean. No, damn, bro, it's gonna be hard finding this. No, we'll take this one for example. Like, let's replay to this given point in time, probably to like this 4-hour burst right here. We're looking at the 4 hour sustaining. Hourly is definitely sustaining. We're waiting for the 20-minute pushes, right? So I jump down to the 20, and I'm just waiting for validations to come in to take this market long. Oh, first one comes in, buy stop over this high. 5-minute low, jump down to the 5-minute low. ATR at this given time is 1. So stop something like this, maybe take a loss here, hopefully not. So my example plays out, yep. So you take a beautiful loss there. Wait for a new 20-minute validation, which is going to be based off of this candle, and then a new buy stop at this high with whatever low is created, which is going to be a 1 stop. Hopefully this runs, so my example plays out kind of well. So ATR stop, you move to break even, all is good, right? Probably take a break even, whatever it might be. Yeah, so you take a break even here. But the important thing that I'm getting at right now is the importance of looking at your volume. And what I mean by that is when I went to open up a position, assuming I'm on my broker, I went to open up a position on my broker because it was a very good trade. And I noticed my position size was going to be 15 contracts. One thing I failed to realize or to look at the given point in time is look at the total number of contracts. Here, if you look at my volume up here, when I go to the given candle, the total number of contracts was 25 in that 5-minute span, right? And the highest we went is like 14, 3 contracts, 25 contracts. That's nothing. And so what that meant is 15 of those contracts of the 25 were mine. So if you do the math, 15 over 25, I made up 60% of the market at that given point in time. 60% of the market was this push of mine, and you get slipped to fuck, dude. Like 15 contracts is quite a bit. It's a pretty large account, so it makes sense. But when you're trading something this big, you need, like, this is the importance of scaling. And this is why big institutional funds cannot do what we do, is because we're opening contract sizes of 15. If a bank wants to go in to invest in oat futures, they're investing billions or trillions of dollars into a market. They can't just set a position or for 15,000 contracts. They're going to push the price so far up, and then they're going to get slipped so much. So that's a very important takeaway that a lot of people don't consider. And so what I kind of started doing is I went to different markets, and I went to EU, and I'm like, okay, let's say we go to a very illiquid session in EU on the 5-minute, which is my entry. Like if you look at the volume bars down here, you can kind of map out when the market's most liquid. This is Asia open. We go through, kind of lose a little bit of that strength. And then the second line is going to be like New York open, probably at around 7:30 my time. And notice how the volume spikes back up. But even in the most illiquid sessions at down here, let's take some random line. Even down here, your average per 5-minute is going to be probably around 500 if you're looking at this number up here, 500, 700, which is still very, very small. That taught me to probably wait until the more liquid sessions. Look at how many contracts every 5 minutes are being signed. 1,000, 3,000, 2,000, 1,700, even in the more illiquid, as we could call, like 4 in the morning, 800, 700, 1,000. And so you're going to make up such a small, the objective is to kind of remain invisible. And so once you start to scale, you have to go up in time frame. So maybe in the next year, I'm going to upgrade to the 20-minute entry time frame. And you know what that means is average number of contracts traded in those 20 minutes. Now you're jumping from, 1,000, 3,000, 2,000, 11,000, 13,000. So you can see how that makes a very big difference. And that's why scaling is important. Otherwise, you're going to start getting slipped and just diminishing returns at that point. So continuing on of what I built off from this is I went back, and if you remember my NAS back, I think it was NAS or gold. Which one did I redo? Gold. So our initial gold was shit, right? Very, very bad back test. Like even I was like, what the hell was that? 11% in 6 months. Like that's horrible. And so I went back and restarted it. And this time I kind of incorporated the things that I learned. And so if you look at this new back test, we did 32% in less than 2 months. So that's a very, very big upgrade. Instead of, 6 months, 6.5 months, now we did the same return or like double the return in a quarter of the time. So what I ended up doing is I went to gold and I went to look at the volume of gold because, I want to see if I can trade certain times. And so I went to the weakest times, which is right at market close, and I started looking at what time volume kicks back in. And I noticed that around 1700 to 1800, the volume kicks back up. And even at the very low, you're looking at 1.5 thousand contracts traded every 20 minutes. We jump down to my entry time frame, which is going to be the 5-minute. And I continue looking here, and it's like, okay, market close is going to be at around 1 p.m. You probably want to leave the market probably at around 1 because you notice that the volume spikes below 1,000 at that point. You don't see any other contracts signed. You don't see more than 1,000 contracts signed per every 5 minutes. Okay, so I started asking myself, well, when is it okay for me to re-enter the market? Because I know generally you're going to get taken out during those times. Lots of chop, lots of wickiness, like there's no direction in the market, no money in the market. Then I continue going, and it's like, okay, at 1900, money stepped back in cool. Money continued, like money was on average probably around like 600 contracts signed every 5 minutes. And then it just goes up, goes up, goes up as Asia opens. And it remains pretty consistent. We don't drop pretty low. Like we're not in the 15 contracts signed every 5 minutes. We're dealing in the hundreds right here. And so the objective is to remain effectively invisible to the market. If you buy a lot, you don't want to be that one person that spikes the market up, especially, and I'm talking big quantities. Like, when you start working with a $250,000, $1 million, $5 million account, right? You got to scale up. And so even right
Yep.
here, you notice the volume spikes, to 2,000, 3,000 contracts signed every 5 minutes, right? So very, very big takeaway for me. It's just don't trade after 1 p.m. and start trading again at like 1,700 is, I think, the rule that I kind of set. And we can go back and like look at more examples, like market closes here. So generally want to stop trading before 1 p.m. And even right here, the contracts went to like 400. And then probably around 1,700, volume starts coming back in, and that's when you get your big pushes. This is when you get your big pushes after New York open. This is when you get your big pushes, right? And then you stop trading at 1 p.m. and look at how the volume drops off, right? So
Yeah, I see that.
it's something that not a lot of people talk about, in the sense of, like, you notice these things over time. They just kind of trade 24/7, or they don't look at these variables. And so I'm going to continue this gold back test and kind of walk you through the new changes that I kind of did, which, I mean, you saw have made a pretty big improvement to the system. So jumping in onto the daily, I kind of want to see this high get taken out. Just following the overall institutional structure, we're seeing something like this, like a longer leg down. And I just want to see this high get taken out. But we jump down to the 4 hour. Like, even notice this wickiness in the market. Wick. Like, every candle has a giant wick attached to it, right? And so
Yep.
on my previous system, I would have just completely stayed out of this. Hang on, give me a second. I would have stayed out of this market. But on the 4 hour, jump down to the 4 hour, like, you look at this market and you're like, this is dog water. Like, absolute shit. Wick. Wicks everywhere. But what you don't consider, and I actually recorded this yesterday, is I got a massive winning trade right here. I think it was like a 1 to 10R. So don't give the 4 hour wicks too much weight to them, if that makes sense. Because, yeah, it's very wicky right now. If we step down to the hourly, we're going to get a way different story. Like, this is very clean price delivery, right? And so we're coming in on market close. So what I'll do is I'll wait till 1,700. So wait for money to start coming back in, and then I can get involved again. Hourly still kind of failing. Give it another opportunity. I want to see it flatline and then build up from here. Okay, first potential entry is given at 2,200, which is 10 p.m. my time, which is very good. But this is on a Sunday, so I don't know if you trade Sundays or not. And notice this 4 hours dog shit, but you jump down to the hourly and the 20, and I mean, this is just a really, really pretty entry. And your volume. Oh, by the way, volume on FX replay is fucked up. Like, look at this shit. It says there's 0 contracts signed in the past 5 minutes or 20 minutes, which is so inaccurate. So, and like at the high of it, it says there, if you look at the right here, it says the highest is 1 contract signed. So like, this is all messed up. So I can't really use the volume on here. And that's why I kind of created the general rule of thumb of looking at this, and it's like, okay, I'm good to trade after 1,700, 1,800. So looking at this is going to be your very, very first entry. Don't get tapped in until this high right here. And your ATR is going to be about 0.5, which is too big for me. So unfortunately, I can't take it. But looking at the 20-minute, I'm going to wait for a new validation, sideways price action. Okay, so this probably would have been a loss either way. Yep. Good thing we have rules and I didn't take it. Now, it is getting a little wicky. Your very, very first entry is going to be over this high. I'm just thinking. Open here, go down, push up. Yeah. So a couple options here. You have a valid trade on this candle as soon as we close, or a valid trade on this candle as soon as we close. I'm not going to take the first one, but I'm going to wait for the second one to validate. Still nothing. Very first entry validation is going to be right on this candle. I don't want to take this one. Just too weird. Like too high to the range, very wicky. Looking at the 4 hour. Yeah, 4 hours good, hourly's good, 20-minute. Yeah, it's just weird. Like no valid entry here, no valid entry here. Valid entry on this high, but then we push down as soon as we opened and then push back up. Yeah, this is your very first entry over this high. Looking at an ATR of like 0.86. So yeah, this is an entry I would take. So let's see what happens. Whoa. Yeah, generally when I get a lot of 20-minute validations like that, I prefer to stay out of the market because more likely than not they're gonna fail. Something like that. But 20-minute, gonna wait for a new entry. Getting very wicky, so probably don't want to touch this market anymore. And this wickiness is probably gonna reflect on the hourly as well. So wait for hourly money to come in. Falls back down. Looking at the 4 hour. 4 hours questionably valid. Hourly is okay. So we're just waiting for hourly buildups at this point. Now we are coming into market close, so we're gonna wait until like 1700. And this is gonna be your very first entry. Looking at the 4 hour, let's see if we're valid. 4 hour, like I said, the wickiness, just ignore that for now, because we are testing this new thing. Hourly, we are getting bought up very nicely. 4 hour, we're very low in the range, so a couple things are gonna happen. We're either gonna get a very strong burst from here, up, or it's just gonna completely fail. But it's those situations where you're gonna take one loss and then you're done, or like that's it, you know? So 20-minute, this is gonna be our only entry, and it's probably gonna be a very fast fail. So I'll just kind of slap it on there. 0.67 stop. ATR at this given time was 0.59. So we are a little bit big, but I'll just throw it on there just cause. Hopefully stops me out. Perfect. Maybe a break even. Yeah, break even, but we'll just count it as a loss. 20-minute, gonna wait for a new validation. New validation right off of this candle. And it's 2100, so definitely a liquid session for me. Looking at the 4 hour. 4 hour still valid. Hourly is still valid. A little weak on the hourly, but that's okay. 20-minute, good. 5-minute is good. Yeah, so this is the long I would take. We're just gonna slap on some random ATR low. So we're looking at like 0.4. So we could do like a 0.2 stop, half ATR. I just kind of guesstimate like that. Get tapped in, move to break even, probably take a break even. Yep. I'm gonna see if there was any management here for me, and there wasn't. So wait for a new 20-minute validation. Still a clean market. First entry candle, but fails back down, so no entry. Still no entry. First entry is probably going to be over this high, depending on where we open. Yep. So I'm going to take an entry over this high. ATR low is 0.6, so we could throw on like a 0.3 stop. Damn, that's tight. It's a very tight entry. But we'll take something like that. Something tells me this ATR is wrong. Just, it doesn't look right. Like average price movement was something like this, 0.75. And that's 0.6, so 0.32. Yeah, it's just something doesn't add up. 20-minute, we're still good for long. Don't get tapped in. Very nice. Gonna wait for a new 20-minute validate. It's still valid. So if we get a very strong candle, nope, no longer valid. Gonna wait for this candle to close, and then we'll get another re-entry right over this high. One, two, and then 5-minute lines up with these highs very well too. And then ATR is going to be about 0.3 again. 3.2, yeah. Get tapped in, very quick break even, probably the quickest break even. No management quite yet. I'm going to manage to this low. We're going to take off 80% of the position right here. So as soon as we hit this point right here, I'll take off 80%. So I just got to play it a lot slower. Okay, I'm going to take off 80% of the position here. And then the rest is at break even. Okay, 80% of the position is off. And then I'll jump up to the 20-minute. And the rest of the position taken off at break even. That's okay. So total, we secured 3.69. 3.69 times 0.8, which is going to be, we secured a total of 3RR there. So not bad. But that was in the hopes that the position would run and leaving the 20% good. But notice how even in the shittiest of contexts, wick, like something I would never trade, now I'm in the market. And I just took an extra 2RR out of, my edge. So waiting for a new 20-minute validation. First entry would be over this high, potential second entry over this high. I'm not going to take it because I'm kind of waiting for this to validate. Yeah, nothing quite yet. Looking at the hourly, waiting for money to come back in. Market fails down entirely, so waiting for the 4-hour to shape back up. Very, very choppy, as you can see. But this is kind of what I'm anticipating right now. I'll leave this drawn out just so we see how we play out. But 4 hours good, hourly. I mean, daily is kind of shit. I'm not gonna lie. 4 hours okay. Hourly is very, very choppy. Or just kind of like sideways, 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 sideways. So if anything, I'd probably want to stay out of this market starting right about now, because we were anticipating the market would go here and then we just kind of failed. Market starts building up on the right hand side of price. 4 hours okay. Hourly is okay. So I could potentially scalp another entry here. Your most recent entry was right here. So probably a break even maybe. Yep, and I still break even. And then your next entry is coming up, hopefully. Potential entry over this high. I'm not taking it, just given the context of this market. Because if we even look at the 20-minute or the hourly, it's like, yeah, we're building up, but it's very shit. Look at this 4-hour. What are your thoughts? Like this is where you get on the nitty gritty of like you really have to think about it, and this is where you get into a lot more of the variables and things that you're looking at, if that makes sense. Like you have to be a lot more attentive to this kind of price action and like really thinking about it. But yeah, I think this is an okay tradable market. This is going to be like your first sign of strength here, where I would consider a buy. But given the wickiness, the last few candles, I'm not going to take anything. And red news approaching. Red news is probably going to be our catalyst up, hopefully. Hopefully. Let's see it. There you go. So our analysis was this is going to happen, right, on the 4-hour. This is what we were waiting for. And it did happen. It's just we weren't able to get positioned, right? Hourly is good. So 20-minute. Gonna wait for a stage 1. Nothing to do here. Money is about to leave the market, so going into rollover. So I'm not taking on any new positions because we know the average number of contracts traded here is probably going to be in the hundreds, not even in the thousands. So I'd rather stay out until 1700. Red news hits, whatever that might have been. Okay, and money starts coming back in, but not in a way that I want to see, right? I want to see baseline and then build back up. So we got 10 minutes left on this call. Now, yes, perfection. So looking at our 4-hour, our analysis is playing out perfectly. We're anticipating this market's going to go that way, aligning with the daily very well. Hourly building up, 20-minute building up, 5-minute long over this high, and it's 2300, so like 11 p.m. my time, which is about to open up Asia. So average ATR of 0.7. So we could do like 0.35, something like that. Stop. See if we get tapped in. We do. Let me move to. I have to replay to get in. But yeah. Oh, didn't mean to move it. Yeah, this is our position. Get tapped in. Nothing to do. Oh, maybe a break even. Yeah, move this to break even, probably get taken out all the way. Yep. 20-minute, gonna wait for an invalidation. Probably gonna go without us, but that's okay. Getting very wicky. Good. So we got a nice little break even on that, and oh fuck, I played too fast. Oh, it was red news though, so it doesn't matter. I think. Red news is in 5 hours. No, so red news is in 4 hours? 6 hours. Okay, we still got time. So 20-minute, let's see how this played out. Your very, very first 20-minute entry is going to be right over this high. I'm not the biggest fan when price chops around like that. Yeah, this is a valid entry, but it's not too bad. Hourly got bought up. What time is it? 2:20 in the morning. I'm going to take it just for data collection purposes. But like, where's your stop loss? You're looking at a 1.12, so ATR of that. 1.2 is going to be like 0.6 or 0.6. So yeah, this is kind of your entry. I'm going to do just like some limit, see if we get in. Get tapped in, move to break even. Nothing to manage to yet. I'll manage 80% of my position to this low right now. Right about like here. 80% of my position is managed to about here. Whoa. 80% of my position is going to be managed to about here. 80% of my position is going to be managed to about here. I should probably just like throw on a label on here. There we go. 80% management, and then we'll do like center it. There we go. That looks clean. So 80% managed to there. 80% managed to here. Somewhere around here. 80% managed to about here. Hopefully we get tapped out now. Yep. So take off 80% of my position here. And then jump up to the 20-minute, and the rest of my position, whatever I have remaining, if I can get to my stop loss, is gonna probably be managed to right about here. I'm gonna give it opportunity to run. Okay, and we take a loss on, or well, not a loss, we just lose a little bit. Earlier we would have made 14R. Now we probably only made like 12 maybe. So that is my new system. And notice how even in the shittiest of shittiest price deliveries, wick, 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 wick. Like even a wick down here. And we still traded this all the way up. Guess what? Where we just made most of our money? In this giant wick. That was that move we just had. Isn't that crazy?
Yeah, I know. It's crazy to think about it.
Oh, my bad. And if we go into FX replay, it doesn't do it justice to look at these equity curves and just see like, oh, like by making that small change, you just made 5 times what you would have made in 6.5 months in just less than 2 months, which is kind of crazy. We'll wrap this call up, and then I got to take care of some stuff, but we'll finish this call up, and then we can do like an entire back test next call, because most of this call
That's
was
fine.
like an explanatory kind of thing.
Yeah, that's fine with me.
So this was a valid entry, but the reason I didn't even want to look at it, 2 reasons: red news and wickiness. So if you kind of realize what I'm doing here is on the 20-minute is where I'm focusing most of my wickiness, where I'll stay out of a market if the 20-minute is wicky, right? Very wicky up here, very wicky up here. These entries are no longer valid for me. Very clean. This is a valid entry, which I think, what did I take here? A loss? I think I took a loss here, or a break. No, this was a break even, wasn't it? It was one of those
Yeah,
two.
might have been.
Here, it's no longer valid because of the wickiness right here. So given an hour, okay, red news plays out. I'm gonna wait an hour, so until next candle, next couple of candles, and then look at our analysis. What were we anticipating? I drew this box long before any of this played out, right? Look at our
Yeah.
daily. What's our goal? Right?
Yeah, target the stars.
Dude, this shit's insane. 4-hour good, hourly good, 20-minute. So we're gonna wait for that 20 minutes to sideways. What time is it? Market closed, so I gotta wait till like 1700 is my general rule of thumb. Okay, and now we're valid for trades. Very clean price action here on the 20, so there might be a nice entry coming up as soon as volume kicks in. Asia's about to open up, so I know if I'm gonna get positioned, it's gonna be right on this strength candle. And there you go. And it is, what time, like 1 in the morning, right as soon as Asia opens? Let me double check. Yeah, like 11:40 or something. 4-hour good, hourly good. Yeah, this is lining up perfect. 5-minute entry, somewhere over this high. ATR low 0.2. Is that right? No, 0.7. So we could do like a 0.35 stop and just kind of play with the numbers here. Too big of a stop. This should be our average stop size. So what I'll do usually is when I don't have a valid stop, I'll set an ATR stop and see where the next candle opens up. Still within risk. I'll take entries like these all the time, but they have to be strong movers. Move to break even right away. Nothing to manage to probably take a break even here. Oh, and we get a nice little mover. 80% of my position is going to be managed to this low. So we'll play it slow just in case it taps me out right away. I'll make this a little smaller. Okay, take off 80% of my position, and then the rest is left at potentially, how much extra gain am I going to get from this? So 3 times 0.2 should be like, if I move my SL to here, we're only going to get about 0.6 R extra, I believe. Let me do the math. Yeah, 0.6. So it's not worth it for me. I'd rather just leave the rest of my position at break even and see where this market wants to take me. And there you go. Like I just gave up 0.6 RR, but that's okay because it was with the prospect that if we get another big candle up to here, you're going to secure another 4 RR or 2 RR, whatever it might be. So very, very clean, hourly, good 20-minute. Gonna wait for this 20-minute to start to straighten out again. But coming into Asia again, awesome. So we might get another beautiful entry here. Nothing yet, nothing yet. Waiting for strength to come in. Hourly is probably starting to fail down. Oh, fuck, I missed it again. So this was probably red news. Yeah, NFP at 6:30. So nothing to do there. Like, we just got to let it play out. For the hourly, so got to wait from 6:30 to an hour. So right on this candle is when we can start trading again. So wait for the 20-minute. There's nothing on the 20-minute. So we're going to wait for some sideways, and we're probably going to reach market close here. So don't touch the market. Not worth it. No matter where you take an entry in here, like even if this were a valid entry for me, I'm not taking it. We got less than a minute, by the way. So let's take a look at our equity curve. Notice the giant difference, bro. 56% in 2 months. That's more of what I'm looking for. So like with a 47% win rate, this is still very high. I need to get this lower. But you can see the big differences right out the gate. So later tonight or tomorrow we'll get another call. And yeah, the call ended, but yeah, guys, this is what I'm working on. Like we've kind of pinpointed one of the biggest problems that I've been having, which is staying out of, where most of your profits can be made on this candle. And our analysis played out very, very well. you know, our analysis was this, and look at what happened. Lo and behold, went that and so much further. So very, very beautiful to see that things are playing out the way I expect them to. I was actually anticipating that this would be the initial burst that would lead us higher. And that's why in February, once this fell down, I'm like, yeah, we're staying out of this market until strength comes in. And then when we jumped down to the 4-hour, everything just kind of started falling. You could have started looking for sells. Very, very nasty, and very, very nasty. But like your initial sells could have come in right here. Look at the hourly. If we were to flip this, probably no entries here. Absolutely no entries. If it wants to load. Yeah. So yeah, there's absolutely no entries here for you. Like the only entry potential is right here, which would be a break even. No validation, no validation. Wouldn't have taken this, wouldn't have taken this, wouldn't potentially a loss here. And then, yeah, market falls off. So very, very interesting stuff. But like in these choppier conditions, sometimes it's better to stay off. Like I had my initial analysis of this happening. Once this failed down, I'm like, okay, nothing really is in, even if you wanted to hop down lower and trade it, because yeah, we said the 4-hour wickiness shouldn't really contribute to our 5-minute entries, right? We'll jump down to the hourly and let's see what that looked like. Is the hourly any clearer? Chop, 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 chop. It's no longer even about wickiness, because the wickiness on the 4-hour is going to be the chop on the 1-hour, if that makes sense. Chop, 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 falls down, builds something, chop, 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 falls down, chop, chop, starts clean, fails back down a little bit, waiting for the 4-hour validation, kind of like here, just waiting for the hourly to start putting in some nice structure. Nothing, chop, 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 chop. Money comes in, boink, I'm in. Money comes in, boink, I'm in. So good stuff, guys. That kind of wraps it up, but very good stuff. And then my silver trade that I took a while ago, I don't know if I still have it on here. We got stopped out. Where was it? 20-minute. What was it on? I forgot what chart we had it on. Was this silver? No, we had a nice little runner on silver. Where was it at? What day is it? Oh no, I'm on the wrong chart. No shit. Oh, it's because I'm in replay. There we go. Yeah, so nice little runner. 20% of the position was taken out here. So total RR was like managed to here. So 6.3, we'll do the quick calculation because I haven't done it yet. 6.3 times 0.8 plus the remaining 20%, which was here. 5.8 times 0.2, 5.8 times 0.2. So a total of 6.2 R. And it would have been better to close the entire position here, but we gave up 0.1 R for the prospect of us continuing higher. So kind of the idea of opportunity cost. Are you willing to give up 0.1 to potentially get a bigger runner? And for me, it was worth it. So good stuff, guys. Anyhow, that wraps up this video. And yeah, we'll see you later.